TFNN. Headline News Update. Here's Tom O'Brien.
Welcome, folks. We have the Dow Industrials right now down 80 points. You get the NASDAQ off 17. S&Ps are off 6.5. Gold contract is up $1.70, trading at $1,194 an ounce. You get silver up 5 cents at $16.63 an ounce. Light sweet crude up $1.46, 61.86. Bonds, the 10-year is flat. 30-year is down 11 ticks at 155.23. And King Dollar's in a monster ABC structure on the way down. It's over 1,000 points down right now, 1,000 ticks down rather, at 94.19. The euro is up 152, trading at 113, and the yen is down 49 at 119.36. Now, if we go over to the SPY and first look at the SPY, this is what you have happening, folks, is that we came down yesterday with conviction. You did 113 million shares. You're coming into the lowest swing point that was established out here on the 30th, which had 161 million shares. Intraday, we've just done an intraday ABC structure on the way down. If we go over to the E-minis and take a look at it, and what that is, the price projection is 2064. And right now you're at 2077. The low that was established out here on the 30th is 2070. So I expect it's going to go into it, number one. Now, that being said, what we also had just done is that we just filled the gap from the April 30th. So you can expect a little bounce in between it. It'll build some cause, but lower prices and all surprises are going to be to the downside in this market. Gold contract. What do we have with gold? Gold is building cause for higher price. The disconnect out here this morning is this. The dollar is down a full point. Gold is flat. That, folks, is divergence, and guess what? Deviance. It's a beautiful thing. Deviance in the marketplace is a great thing. Why? Because the counterintuitive deviant market, bottom line, is saying it out here today. Gold should be a lot higher. What is it doing? It's building cause. And I expect you're going to see gold in the next few days take off after the 1224 mark. Now, the bond market is where we're going to get the most amount of information. And this is why. The 10-year and the 30-year bond are both going into the March 6th swing point. Now, they're both coming into that level with dramatically lighter volume. 127.16 is the high of the 10-year. I expect what you're going to see is this. You're going to see a rejection of that level. You're going to see a bounce in the next few days in the bonds, and a correlation inside the bounce is going to release the information. That information that we're going to be looking for is this. Do you bounce on lighter volume or heavier volume? You bounce on lighter volume, what does that set up? That sets up a bond market that topped out on February on the 10-year at 130. What it also sets up is this, though. It'll set up the answer to, as this market's going south, is this market going south because of rates or because of earnings? If we bounce on lighter volume, that market is going south because the market's saying rates are going to go higher. If we go over to the dollar index and we take a look at the dollar index, what you have is this. Dollar index is on an ABC structure on the way down. It looks like they're going to get the volume also. We've already broke the B point. The B point on this is 94.47. We need more than 85,000 contracts, and we're going to get it. Right now, you're at 10:03 a.m., and we already have 40,000 contracts. That's going to project over 100,000 contracts. A to B equals C to D, you're talking 94, flat out. We're already at 94.22. So what does that set up? That sets up a larger ABC structure on the way down, meaning you're going to do more than a 1-to-1 ABC structure on the way down. So what you can expect out here is all surprises to the downside. You will get counter-trend bounces, but this is fast, furious. Whoever was selling into this market this morning in those S&Ps, that's no retail trader. That is a very large trader, folks, that's sending big orders into the marketplace. Distribution is over. Now you're at the beginning of the markdown period in this market. This 10 a.m. update is brought to you every day by Everbank. For more information on the products they offer, visit everbank.com/TFNN. Have a great one. Have a safe one. Look forward to speaking right back here at 10 o'clock tomorrow morning.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the Future Economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.